Good evening traders, it's Simon at Kairos Capital Markets. Today I want to go over swing trading and to show you how you can spend quite literally probably about 20 minutes, half hour a night trading and creating 3 to 5% per month without really doing too much work. Just long-term trades, they take time to develop, they do this, that and the other, so when they do come along you got to take them, but at the same time you can enter them and leave them for weeks and months at a time with no real issue. So what I'm going to do a description of here is a couple of ideas on pound yen. So in one of the very first videos of last year I was bullish on pound yen, and to give you a clue, this is the 3 monthly chart, and to give you a clue, at the end of the year that's all we had. We saw this bullish engulfing candle here, and I said I'm bullish, and I had this trend line down here, and I was like I'm bullish to about 170, 180 it was at the time. As it's progressed, I'm not so bullish now to 180, definitely 165. The 3 monthly 50 hasn't really done anything, but this trend line here is of a concern to me, so you know that's why I think I'm getting out there. So with that in mind, let's see why I was bullish. Well, quite literally we're forming you could say generally lower highs the way through here, but you had a clear 130 being the floor of this market, and the fact that inside bargain triple bottom, it was quite nice to look into further. And obviously the monthly chart as well at the same time. Where was that one? Here it is here. The monthly chart here was doing this. This is what you saw. And I was just really looking for pullbacks and value here. We never had massive pullbacks here, but what we did have though on the weekly and daily was this triangle form. So this is your triangle you had here, and there are a couple of trades you're taking as a swing trade to make a few percent. So obviously 2017 started around here. This was never here. You can't put this, say, oh, this was it is a lower high, don't get me wrong, but you would not have suggested it would have really been there as such. Just looking at the weekly chart, there's nothing to suggest it would stop there, but you can definitely short here, and this one here you can go short as well for a swing trade. You could have done quite nicely. Here you could have gone for a long here, no problem at all, because you had structure there. And here is where we are now, which I'm suggesting to go long again. I am. So I'm going to show you some of these on the daily chart, what I was looking for, and how you could trade them for a couple % here and there on just one pair. I know some people go, oh, you know, 1% here, 1% there isn't good enough as such, but when you compare that to what you can get elsewhere and all the amount of pairs you can have, so you can have like 30, 40 pairs on your watch list, and you can pick like say 1 or 2 a month you can, and you're making a nice little return there. You are as such. You are going to lose some trades, don't get me wrong. I mean, that's the way trading goes. You get stopped out sometimes, but there's nothing you can do about it. So here, personally myself, the best trade to go short was this one here. The reason why, although this produced nice candles here, to get a result on the weekly chart, let's go back to the weekly chart here. So for you to actually get it there, you'd have to get in here, you would. Just there, you would have to put your stop above there, definitely, and you'd only gone down to 140. 140 was a logical level to go to, and that there is just over 1% in 3 weeks. So again, some people don't think that's fantastic, but there's not much risk there, if that makes sense. You know, in sense to how you'd actually, you know, how it moves up and down. It's very relaxing for most people. You don't need to be at the computer for it. The best short was here on the weekly chart there, and when you come down to the daily chart, that's there. It would have been, your entry would have been these candles here, these ones here, okay. And personally myself, some people went to different ways and stuff, but when you see 3 high tests and a bit, you know, it's bullish then bearish the next day, that's lovely. What you do is put your order entry there, put your stop above the highs. You know, about there, you may want to put a high above there as well if you wanted to. It makes sense. And again, you look back at the weekly chart. Where's the most logical point to get out from here? Well, it would definitely be this upward sloping trend line. So 144 would be the most logical point really to get out. Let's go back to the daily chart, and I had a little zone at 144.5. So you probably would have done the daily 50, and that's where you would have got out there. Again, another 1.1%. in a couple of weeks. But what I'm trying to point out to you guys is this, is you only want to take the high probability trades. If you can take one of these a week, you'll make 4% a month, which is more than what most of the hedge funds would make. So, you know, that's what you're looking for. Now we're looking here. So I want to go long now here, and I'm waiting for the trade to come back down to test this daily 50 EMA. I'm still waiting for that at the moment. And let me explain to you why I'm waiting for that now. So on the monthly chart, I got this key level at 148 roughly on the monthly chart. It had a couple of touches here, then everywhere. We had a nice clean break to the upside of it last month, which was quite nice. I'm not giving two hoots about this monthly 50 EMA. It's chopped through it 1, 2, 3. A little bit of support there. It's not trending. It's in a pattern, so I couldn't give a damn about that. And then when you drop down to the weekly chart now, what you've done now is this. Essentially, this is your triangle here. I'm just going to pop that triangle back in for you guys quickly. There, and there. That's your triangle. And what's happened is you popped up, popped down, you tested the triangle on the weekly chart, and now you're moving up. So now what I'm looking for is value. I'm just looking for value now. And personally myself, value comes in from the daily chart, and it'll be the daily 50 EMA. That's what I'm looking for value. So for me, you've got a few options how you trade this. Some people can just put an order there at this level of 147.5 because it has come down and tested it. So once it's tested here, no problem. But the fact that we'll break out of this upward sloping trend line, a pullback down would give you bullish sentiment on the daily as well as the weekly chart, and then that would be the double test of the triangle, which is beautiful to see. That's what I'm looking for. And then look where my target is. Your first target can initially be 151. That's a little 3% trade there, and that's what I'll be looking for, just like that, nothing else. If you wait for it to come back down and come back up, open up that way, you might have to do something like this, something like that, and something like that, 1.8%. But that then has less risk in it because you've actually proven it's tested the key level again, so you got more confidence on your trade. But I said that you could enter here, no problem. Put your stop around. You can put your stop below these lows here. Have your target in there, and I think you can get 5%. You know, I mean, it absolutely depends on how you trade and your risk appetite. But like I said though, what does that take to take that trade? Well, you know what you're looking for. You know it can come up. You can get alerts sent to you. TradingView do alerts sent to you. You can pop on the app once a day. You could twice a day, whatever. Whatever you do to look at the charts, you can do. But if, like me, you're extremely bullish on this trade, you can take this up to 160. And there's a 17% trade you can. And that's what you want to wait. So this whole entire year, we've had this triangle forming where you earn no money, and you come down here, take the trade, 17% for the whole entire year. Again, one trade, that's it. You don't need to trade that much to make money. But this is the art of swing trading. It gives you freedom to do what you want while making money. And that's what I want to kind of portray to you and show you what it's all about with the swing trading wise. Day trading, you know, I do a little bit of day trading as well. I've got other strategies as well to make other percentages in different ways, this, that and the other. But when you're doing it 24/7, you do need to relax sometimes. So different people have different styles of trading. For me personally, I always prefer the higher time frame because it's easier. There's less risk involved, and you take fewer trades. It costs less for your trading itself in your account. And I believe you do make more money overall, purely because you don't really lose so much. Because you've got so much more behind you, so much structure. You can obviously time it more on the intraday charts as well. You can do that as well. So I'll give you another example very quickly on how you then scale down. So this is $SEK. This is an inverse head and shoulder pattern here. Just to show you very quickly. Left shoulder's round about there. Neckline. Head, neckline, right shoulder there. So there's your inverse head and shoulder pattern, which is quite nice to see. And all I'm looking for now is a pullback to test this level here at the neckline. Simple as that. Thank you very much. Come back, test neckline on the 4-hour chart, and then why have I got such a huge trade here? I mean, I can take it personally myself. If you break this 8.4 level, come down and test that, this trade will then head up even higher. You go up something ridiculously high, but again, you have to wait for these trades to come up, you know. But why not in the market? There's no risk to you. When people talk about everything about North Korea blowing things up and whatever else they're going to do, and everything's going crazy, you can sit on the sidelines, put your hands underneath you, under the seat, and relax. That's all you got to do. That's how you trade the swing trading, anyway. So I hope you learned a little bit on that. Obviously, I can teach people more about the entries and everything else. But other than that, I'll speak to you soon. Take care.